Picture this. You buy a home in San Antonio and you keep the seller's old mortgage rate. They're 2.75%, while everybody else is signing at 6.35. That is a VA assumable loan, and right now it is one of the most overlooked moves in this whole market. So first off, welcome. I am Christopher Beal, Army veteran and Realtor here with Veteran Real Estate San Antonio. I work with military buyers and sellers across Bexar County every single week. And today I am walking you through VA loan assumptions, top to bottom. What it is, what it saves you, who qualifies, and the two catches that trip people up. Here is the simple version. A VA loan is assumable. That means a qualified buyer can legally take over the seller's existing VA mortgage. The same balance, the same terms, and most importantly, the same interest rate. So if a family bought near JBSA Lackland or Fort Sam Houston back in 2020 or 2021, they very likely locked a rate in the 2 to 3% range. That loan can transfer to you. And in a town like ours, sitting right next to Randolph and Camp Bullis, there are a lot of those low rate loans still out there, just waiting for the right buyer to notice. Let me put real numbers on it because this is where your jaw drops a little. Say the seller has about $280,000 left on their VA loan at 2.75%. Assume that loan and your principal and interest run around $1,143 a month. Now take that exact same balance at today's rate, call it 6.35%, and you are looking at about $1,742 a month instead. That is a difference of roughly $600 every month, which is a little over $7,000 a year staying in your pocket instead of going to interest. And here is a bonus most people miss. The VA funding fee on an assumption is just 1/2 of 1% of the loan balance. On that $280,000 loan, that is about $1,400. Compare that to 2.15% on a brand new VA purchase, which would be over $6,000. So you save on the monthly payment and you save again at the closing table. Honestly, I love this part. Now, a big myth I hear all the time. People think you have to be a veteran to assume a VA loan. You do not. VA loans can be assumed by veterans and by civilians. Almost anyone can potentially qualify. But there is a fork in the road here that matters a lot, and I will get to it in a second. Whoever assumes the loan, two things are non-negotiable. One, the current loan servicer has to approve it. This is not a handshake deal between you and the seller. Two, you still have to qualify, standard underwriting. They check your credit, your income, and your debt to income ratio, just like any other loan. Here's the fork. If the buyer is a veteran with their own entitlement, and they substitute that entitlement using their certificate of eligibility, the seller's VA benefit gets fully restored at closing. If the buyer is a civilian, the seller's entitlement stays tied up. Same house, same low rate for the buyer, very different outcome for the seller. Hold that thought because it becomes the whole ball game in a minute. Okay, keep it real time because I am not going to sell you a fantasy. The rate is amazing. The catch is the cash. When you assume a loan, you are only taking over the balance that is left, not the full price of the home. The difference between what the home is worth and that remaining balance is called the equity gap, and you have to cover it. Let me show you why that one stings. Say a home is listed at $550,000 and the seller only owes $310,000 on their VA loan. You assume the $310,000, but you still owe the seller their $240,000 in equity. And that cannot be rolled into the VA loan. It comes out of your pocket in cash or through a separate second loan called secondary financing. So here is my honest advice. Do not fall in love with a 2.75% rate before you run the cash you actually need to get in the door. On a home that has climbed in value since 2020, that gap can be huge. The rate is real. The cash is also very real. And if you are on the selling side, this one is for you because a low rate is a genuine marketing superpower right now. In a market where buyers are staring down 6 and 7%, a home with an assumable loan down in the 2s can sell faster and really stand out near JBSA. That is a real edge, but here's the straight talk I owe you. If you let a civilian assume your loan, your VA entitlement stays locked to that mortgage until it is paid off. That means your zero down power is tied up, and you may not be able to use your full VA benefit on your next home. For a military family that is about to PCS and buy again, that is a big deal. The fix is simple when it lines up. Sell to a veteran buyer who substitutes their entitlement and yours comes right back. So screen for that and plan for time. An assumption runs about 45 to 90 days because the servicer and the VA both have to sign off. It is slower than a normal sale, but for the right buyer, that rate is worth the wait. So let me bring it home. A VA assumable loan lets you take over a low 2 to 3% rate that could save you around $600 a month, with a funding fee of just 1/2%. Almost anyone can assume, with servicer approval and normal underwriting. Buyers, watch the equity gap. That is cash you bring to closing. And sellers, protect your entitlement by selling to a veteran who can substitute it. If you are trying to figure out whether an assumption makes sense for your situation here in San Antonio, that is exactly the kind of thing I map out with folks every week. No pressure, just clarity. I am Christopher Beal with Veteran Real Estate San Antonio. Call or text me at 210-882-8583 or find me at veteranrealestatesa.com. I will see you on the next one.